Okay, so thank you everyone again for joining this PE Bootcamp. We're going to be covering a ton of material, so let's jump right in. And so the first piece is Introduction to Private Equity. And some of the things that we're going to be covering here are, first off, like what is an LBO? Hopefully some of you have familiarity with that. If not, no worries. And for those of you who do know, we'll keep it fast so that you're able to not stay bored. Then we're going to talk through some of the main players and how to sort of split up the market, especially discussing the mega funds versus upper middle market, mid market, lower middle market, just thinking about that spectrum of types of funds. We're going to answer the question of how to think about the styles of investing, and then we'll do some case studies on successful LBOs. And for those of you who are following along in some of the online course references, this basically ties to these two modules here. I'll generally skip through that, but just note that if you're interested, jot those down and you can come back to it. So we'll just start out by discussing a very common analogy to help describe an LBO. Anyone here familiar with this analogy and or want to give me just a two-sentence pitch on what this means?
So when you buy a house, you get a mortgage, and over time you pay down that mortgage as you make the income, and that's very similar to an LBO.
Exactly. Yeah. So Andrew got right to the heart of it. But basically, the idea here is that similar to buying a house, a PE firm will often go and research a market that they're interested in investing in. They'll go to a bank and get leverage on that loan. They'll pay a down payment, an equity check. And then over time, they'll either live in the house and pay down the mortgage, or they'll rent it out and someone else will pay down the mortgage. And by the end of the process, they own a business. So that's sort of in short what private equity is. You start by researching the sector, and then you go and buy the company with some mix of debt and equity. And just by the way, today that looks about 40-60 split in LBO land. And even with some recent market concerns, that might be 50-50, it might be 30-70, but 40-60 is fairly common. And then the main idea is that you end up owning a business that you don't actually buy with your own money, which is a pretty powerful idea if you ask me. And that equity that you are putting in doesn't even come from you. And so the down payment essentially comes from limited partners who invest in the fund that then invests in companies. So I know that's a little bit complicated, but hopefully gives you the idea of the general structure. So how do you actually make money out of this? Let's get into some of the sources of returns. Just to read them through here, and then we'll discuss a little bit about what they mean. First one is leverage. And basically what that means is you are using debt. You're putting debt on the business. That's getting paid down. Therefore, when the debt gets paid down, you're earning money on your equity. The second piece is associated with that, like you're doing that with cash flows. And then third piece is obviously you're hoping to grow the business in the time period that you're owning it. And so it's not just going to stay flat and you're going to end up with the same business at the beginning as at the end. This is growing. And like you are an operator as a private equity professional, you're helping improve the business that you're working with. Then, of course, what you sell matters a lot. And so if you buy the house for 300K and sell it for 500K, you're going to get a pocket the difference. And so the entry multiple that you buy at is actually super important as well. So broadly speaking, that's how we make money. But there's a couple of nuances in today's markets. The first is that historically, we've often focused on growth. Now we're focusing on profitability a little bit more, especially after the post-COVID bubble. I don't know if any of you remember 2021 and how much the stocks boomed and multiples were crazy. That's changed a little bit. And so today, investors often are focusing a little bit more on profitability. Oh yeah, I saw someone came off mute. Did you have a question about that?
No, that was by accident. My apologies.